Hi guys, Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals brokerage house. Well, there were a lot to talk about today, but I want to start with what's going on at Wells Fargo by forcing those fraudulent accounts. I'll remind you, but I'm going to read from this piece. The San Francisco-based bank has succeeded in getting several judges to toss fraud lawsuits over the bogus accounts. Remember, they opened over 2 million fraudulent accounts. That's called identity theft if you or I were to do it. But bogus accounts, by asserting that even though the accounts are fake, they stem from legitimate accounts the victims opened. Therefore, they agreed not to sue, and those arbitration clauses, all of these contract clauses, are written broadly enough so that they can interpret them in any way. So far, a judge has said no. Eric, could you put this up so they could see this particular case, though there were several of them? It's the signatures. So you can clearly see that a person that opened up a legitimate account with a certified signature on the top, and then the bogus signature on the bottom. Yet they can't sue because they're being held to arbitration clauses. All right. You might want to look at that. It's pretty interesting. Also, I want to update you on what is happening to the fiduciary rule. Remember, the fiduciary rule says that you must do what is in the client's best interest first. And that's going to affect on the 1st of next month. Now, they could cancel it, but if they don't, so BlackRock and Vanguard urge delay because they want to have a chance to take that off the books and not go into place. Their argument is that if they have to do what's in the client's best interest, that would cause investor confusion and the unreasonably high costs because they might have to put them into lower feed products. I mean, to me, this is such a joke, but look at that. Now, what I also want to point out is what's happening in the dollar markets and the gold markets on the bottom. Now, these are obviously the spot markets, but still. Now, on the top, you can see that the dollar has broken this support level, which means if technicals still hold in this bogus market, that the most likely next direction is for the dollar continue its downward trend. That will help those foreign entities, emerging markets that have taken out a lot of debt in dollar terms. However, we want to keep an eye on that. But even more important is the bottom chart where you can see how I drew in that wedge formation. And you should be able to see right there that spot gold has broken out of the wedge, which means that if technicals hold true these days, that it will continue to go up in the spot market. But I would like to also point out this big dip right in here, because what happened on March 15th? Two important things. Number one, we hit the debt ceiling, which you don't really hear anybody talking about anymore, but they still have to raise it. And number two, Janet Yellen raised the interest rate that it pays the bank on reserves, raised it 0.25%. Now, this is my opinion, and also would hold true to the typical pattern. Up to that event, we were in jeopardy of breaking above 1260. And that would have been a key technical level and more obvious. So gold spot was pushed down, and look at what happened. Here's the 15th right there, and now it's gone right back up. So we want to keep our eyes on that because these markets are extremely vulnerable, and the insiders know that. So this is the weekly insider sell ratio. On the bottom, where you see those things circled, something's going on at Walmart. The major holders, the Waltons, have been selling, not just this week, but an ongoing massive amount of stock into this severely overvalued market. And so actually has Mark Zuckerberg over at Facebook. And actually, a lot of the insiders at Facebook have been selling a lot of the stock. Why not? They know these markets are vulnerable and overvalued. Do you know that? Because they do. You know my philosophy. You should always do what the smartest guys in the room are doing for themselves. Not what they're telling you to do, but what they're really doing. And they are getting out of these markets. And then finally, I want to talk just a little bit about the April 11th webinar. It's going to be a good one. I mean, I always learn so much when I do these and I focus on one topic. But this is what it's going to be about, the obvious crisis, but the real crisis, and then taking advantage of that. One of the things you need to be aware of is that on March 1st, the Teamsters Union, which was always one of the biggest, if not the biggest, and the most well-run and successful union, well, they're out of money as of March 1st. How's that going to impact the 4,000 Teamsters that were there? And what does that really tell us about the rest of the system? So I hope you sign up and come for that. Bill is out sick today, so the images and the links will be posted tomorrow when he gets back. But come to us. Give us a call at 888-696-4653. Subscribe to us on YouTube. We'll let you know when we're doing these live events. Like us on Facebook. Follow us on Twitter. And share this information with everybody. We need to come together as community. Because if we do not, then when this whole thing implodes, the next system is going to be even worse than the one that we're already dealing with. So please share this. And again, call us. You take care now. I'll see you on Thursday. Bye.